Everybody's going to say they're conservative when they're talking about their deal. What does that mean? That is the first question that you have to ask. Show me where you're being conservative.
Welcome back this week to the Dynamis podcast, guys. We have a really unique episode this week. I'm always talking to you guys about saying yes, leaving the door open for opportunity, saying yes, taking a risk, because you never know what's going to come in that door. You never know what kind of opportunity is going to spawn from that. You can never fully understand the symbiosis of a two-way relationship. And this is a perfect example. I have a friend who we have a mutually beneficial relationship. He's been featured on this podcast before, and that friend has introduced me to other high-level individuals, and the guest today is one of them. And I would just continue to encourage you to say yes to opportunity, to step out, to take a risk, and to be useful. If you want to level up your network, if you want to level up your life, then become useful, become undeniable, invest in yourself, invest in your skill set. And I think that's going to really be highlighted here today, and what saying yes and becoming a better overall individual can truly do for your life. And I want to introduce to you the guest of our show today, John Vander Giessen. John was born in Idaho, and as many Idaho natives do, grew up with a deep love of the outdoors and a respect for hard work and an unwavering sense of independence. These qualities obviously went on to serve him incredibly well on his life's journey. John went on to become a professional rugby player and was in the French Top 14 League and the English Premiership. John proudly represented the United States in 2 Rugby World Cups and earned a captaincy role during that time. After his rugby time was up, his rugby boots were collecting dust in the garage, and at that point in his life, John decided to go into entrepreneurship and real estate investing. He currently holds a role as a partner and vice president at REM Capital. REM Capital owns and operates nearly 4,000 units across 7 states with over 120 teammates. This is no small entity. John's superpower is to help individuals and organizations become the best versions of themselves while living with integrity and value. John, thank you so much for being here. Welcome to the show today.
Hey, Tim, it's really great to be here. I'm excited about this conversation.
You have such an impressive resume. I feel like the audience probably gets sick of me hearing that because I say it every week, but I feel like every single guest we get in this studio is just a straight up heavyweight. The bullet points on your resume are just incredible. And oftentimes, as I'm looking at these resumes to prep an interview, it can seem overwhelming. And then I meet these individuals and I realize there is just so much more than bullet points on a piece of paper to these individuals that make them successful, that make them these heavyweight winners in life. And I have no doubt that as we get into this conversation, that's going to become fiercely evident in this conversation today. There's a couple things that I want to talk about. There's a few directions that this podcast could go in. Because you have such unique experience, I'm going to try to take advantage of that with the limited time we have. But some examples of where I kind of want the audience to be led today is I'd love to dive into real estate syndications. And I would love to hear your story of growing into 4,000 units, transitioning out of becoming a professional athlete. And on that note, it's not every day we get to talk to professional athletes, and I'd love to dig in to that. I'd love to know about how that helped you and impacted you on your journey to entrepreneurship. And I'd also really like to cover what it takes to effectively manage a team of 120 individuals. That's a decent size team. So how do you cultivate a winning atmosphere and have a shared positive experience and environment? And those are just some examples of kind of where I would like to lead the audience today.
Well, Tim, I think that's great. Your comment about bios, these heavy hitter bullet points and all that sort of thing. I think that it's important to recognize for the audience that those are legitimately just the public wins. And those public wins came from a whole lot of private wins. You had to do a bunch of work behind the scenes when nobody was watching. It wasn't on social media. It wasn't on a podcast or YouTube, whatever. There was a lot of moments stacked up. And generally speaking, when I have talks or interviews, I always like to talk about the fact that folks need to be persistent and consistent enough in their goal pursuits to actually give it the time frame it needs to experience the result. A lot of people, they try something for a very short amount of time when in reality they probably would have gotten much closer to their goal or achieved their goal or went beyond their goal if they just stayed consistent and persistent long enough. A lot of the things that you see on my bio, Tim, it's legitimately because for whatever reason, I've been blessed with what I've been told is a lot of grit, right? I'm just willing to kind of stay in a trench a little bit longer with a shovel and keep digging until I get to where I want to get.
I think that's an excellent point. Success leaves clues, right? So every individual that I get in this show that's doing something significant and impactful, the breadcrumbs that they leave behind for us to pick up is similar in theme. And that's all of them are basing boring, basic fundamentals day in and day out over a long time horizon, right? They're not thinking right now. They're not thinking a single transaction. They're not thinking like, hey, I did this one thing. I manipulated this one input. I should see instant success. It's the realization that they are becoming undeniable individuals. They're forming habits and disciplines. Their identity is morphing into a person who shows up day in and day out, whether it's going good, whether it's going bad, cultivating a winning environment, cultivating this fundamental process of sow the seed every day. Show up, sow the seed, water the field. Having reasonable expectations that anything worth harvesting isn't going to be harvested in a short time horizon. There's this adage that kind of talks about crock pot food versus microwave mentality. Microwave, you put something in the microwave 30 seconds a minute, you get instant gratification. But the reality is like, there's nothing that's going to come out of that microwave that's going to be as good and flavorful as a slow cooked crock pot meal where everything's kind of marinating together and the juices are flowing together. And I think more people really need to adopt the mindset that you're talking about. And that's that, listen, nothing happens overnight. You can't just expect instant success. There's a lot of private fails and wins that people aren't seeing publicly. And having the discipline to stay in the trenches, stay in the fight, have reasonable expectations is going to get you into a league of humans that most people will never see because they'll never push long enough to unlock that door and reach that circle.
I think a lot of people are looking for the excuse to stop, right? Well, the market changed and it wasn't the market's fault. It wasn't my fault or,
right.
Whatever that might be. People were mean. I didn't have the right product. There's not a lot of ownership there. But, I grew up, as I said, in rural Idaho, agricultural background, family, friends, a lot of folks, in that space. And you got to recognize that there's so many similarities to agriculture and business and life in general, success, because when farmers plant seeds, it takes a long time for that germination to take place. So in essence, you have faith in the fact that something's going to happen, and you continually do the daily chores that need to take place in order to get the result. Depending on what you're growing, maybe it's a few days, maybe it's a couple of weeks that something finally germinates and you see a little tiny thing that pops out of the ground. And then you're like, oh, well, I only have this little tiny thing. Well, you keep investing into it. You keep investing into it and you stay committed to it. I'm a big fan of Jim Rohn. And if you don't know him, he's like one of the OGs in personal development. I mean, Tony Robbins says, hey, Jim Rohn was a big thing for me growing up. He's a Southern Idaho guy too. Jim talks about, hey, some of those seeds that you plant, they're going to get eaten by the birds. Some of the seeds that you plant, they're going to be they're going to fall through the cracks. They're going to dry out. They're not going to have enough water. But some of those seeds are going to go all the way through to harvest, and that's going to be where your win is. But it takes a long time. It can take months and months and months. And in the arena of life, it can take years. And Gary Keller, a billionaire from Keller Williams, he talks about really never hitting any of the goals that he set out to hit in the time frame that he initially set out to do them in. So because you don't hit a goal in the time frame, hey, I want to make $1 million in 5 years. Well, if you get to 5 years, or let's even backtrack, let's say that you get to year 2 and you're way off track for your goal. Do you stop, or do you look at strategically for this campaign? What do I need to be doing differently? Stopping is not necessarily the thing, but let's look at it back up out of the situation, and having a nice cabinet of people in your corner that you can bounce things off them to say, hey, like, you know where I'm trying to go. Should I be looking at doing something a little bit differently, changing my strategy and my tactics to better ensure that in 5 years I get as close as possible or exceed my goal? And when I get to 5 years, if it's still working really well, but I'm not quite there yet, well, great. I mean, are you really going to be upset if you get to year 6 or 7 or 8 and then you've made the million? I mean, you're still doing quite well. So there's a lot of opportunity there, but it takes a shift of the mind to think that way.
Or what if you arrive at year 5 and you're making 900,000 and not a million? Is that a fail? I think these are important things to kind of dig into. What is that saying? It's people often overestimate what they can accomplish in a year and underestimate what they can accomplish in 5 years. Will 80-year-old Tim, 80-year-old John be thankful for this decision that we're making today? Is it moving us closer or further from the lifestyle we want? If more people categorized their decision-making and their efforts every day into those categories, I think people would probably be a lot happier and further along. Would you give us just some background? How does an Idaho boy discover rugby and rugby at the level that you reached, the heights you did?
Man, my first driver's license says 5'7", 125. In my playing career, I was 6'6" and about 265. That actually was a good thing because all of my friends were grown men in high school, and I was maybe a little while away from puberty, put it that way. So smaller kid for sure, didn't really play sports in high school. I had 1 year of basketball and then went to University of Idaho for college. Really lacked direction, just doing it because I guess that's what you're supposed to do, right? You're supposed to go to college. So when I got up there, I discovered that I really didn't know how to study. So I had to make some pretty big shifts there. And I also wanted to do something. I just wanted to, get active. And a friend of mine said, hey, you should come play rugby. And my response was, what's that? I had never heard the word rugby. I did not know what it was. And so I came out on the Tuesday training and the Thursday training with the men's club at the university and played that weekend and did everything wrong. A lot of penalties, let's put it that way, but really tried hard and thoroughly enjoyed myself. And I came off the field and I was like, what was that? So I had to do some research, went back to a computer lab at the university back when I think that they still had computer labs, and found out that there was a Rugby World Cup. Hundreds and hundreds of millions of people watch the Rugby World Cup. It's a massive sporting event held every 4 years in a host nation. And in 2003, that was going to be Australia. And so the most rational thing in my mind, after being gifted some VHS tapes of old international matches, South Africa versus England, etc., that I needed to be where they were playing chess, not checkers, with the sport of rugby. You go to these nations and kids are playing in bare feet in rugby at 3 and 4 years of age, intramurals, and that's, you get to develop some incredible skills in that game. And so I wanted to be around those people and experience what it was like to go to a Rugby World Cup as a fan. So I bought a one-way ticket and flew out from Idaho to Sydney, and then had to figure out my way up to Brisbane, which is basically like flying into Florida and then trying to get up to New York. So my thumb out and taking a bus and some walking and renting a car and on the opposite side of the road, all those good things, which you look back, when you're a young kid and you appreciate those sort of memories because they are very much character defining. And so at that point in time, Tim, I just stayed in a hostel and eventually made my way onto the rugby field there for the university and made some great contacts and friends and was able to really develop my game to a much larger extent, but still really novice, very fresh in the game. Let's realize that. And I mentioned to you, and you talk about it too, Tim, people opening up doors for you. Well, one of these stories is really fascinating. So I did go to the Rugby World Cup a couple of times. I watched the New Zealand All Blacks and I also watched the U.S. team. And it never even dawned on me as I was watching the U.S. team that those guys on the field that were at the, top echelon of the game were actually going to become my teammates and my opponents. It was amazing looking back at that point in time. And I still have a lot of friends from that 2003 World Cup I didn't know at the time, but they're my friends now because we ended up playing together. I went back home after my Australia experience, fully expecting to start my master's. That was going to be in the combination with the Peace Corps. I was going to be in the Philippines for 27 months. And all of a sudden, I get this email from one of the guys that I had connected with in Australia. And he said, John, I've moved to France and I'm coaching a men's club. I was wondering if you'd like to come and play for our team. Being, a young 20-something-year-old, I was like, wow, this is amazing. And my brain kicked in on trying to keep me safe. And it said, well, where would you stay? And is this a paid position? And, how are the flights? Where do I go? How long can I stay with a visa? Just looking for any kind of way out, to say no. And I think it's important anytime you have opportunity, your brain is always trying to keep you safe, wanting to make sure that, you don't put yourself out there too much. I sent that long email. It was a couple of pages of questions. And this gentleman responded back. He said, John, fly into Geneva. I'll collect you there. And that's all it said. And, this is before cell phones and whatnot. I didn't have a cell phone. So that was a defining moment, because it would have been very easy for me to say no to him. I could have just been like, man, this is crazy. I don't even know that guy that well. Something inside of me said, you need to go do this. You need to go find out. And I think that I've looked at that a lot, Tim, in my life, where you could try it and see what it was like, or you could not. And if you don't, are you going to be upset when you're 80, 90 years old looking back and having regret? Where what was the worst thing that legitimately was going to happen if you tried it? I also was curious because I was like, I'm pretty sure Geneva is not even in France, which is true. So, but I did fly into Geneva, and you know what? Coach Croft was there to pick me up. That was a pretty interesting moment in time, Tim.
Look at all this opportunity that grew out of that. And look at the career that you went on to have, the network that you went on to build, and the life experience and skill set that I guarantee you probably still draw on today. And it all came from saying yes. You overrode the human side of your brain that was living in fear, that was telling you to freeze, that was telling you to not go forward, was finding all these excuses. And this is another breadcrumb of success that we often see from successful individuals, and that is they're aware of the fear. They take note of it. They're aware of it. They consider the risks, but ultimately they're not paralyzed. They're not controlled by this fear in their brain, and they have the ability to push through the human fear and say yes in a calculated manner. You're not reckless. You're not throwing yourself in front of a moving train, but you are pushing past this fear and into a discomfort zone. And through that discomfort, we usually become who we need to become. We meet a different version of ourselves at the other end of that then we use in the next season and phase of our life. And it's a continuous muscle. It's like going to the gym, sitting in that discomfort, saying yes, pushing through, becoming a new person. There's this metamorphosis and so on and so forth into each level. I have a really similar experience to you. I used to be in a special operations unit in the military. And I remember when I signed my contract to try, I can't tell you how many people tried to talk me out of it. Why would you go do that? Don't you know how many people fail? Don't you know the numbers? It's like a 70% attrition rate. Almost nobody makes it to that unit. And then you're just needs of the Army. And you could end up in some crappy unit across the world. And everybody was making these decisions and trying to influence mine out of fear. And ultimately, I asked myself, well, first of all, if other people have done it, why can't I do it too? And second of all, am I going to regret not even trying this? Like, what do I have to lose? So what? I get a crappy duty station. I have an opportunity to work with the most elite individuals in the world. All the upside and very small downside. Yeah, there's risk. It's going to be hard. It's going to be challenging. But why not say yes? And guess what? The fruit waiting for me at the other side of that experience of just saying yes, taking the risk, has changed my life forever. The network, the mindset, the fraternity I'm in. And I think if more people lived by that, they just realized like, hey, the best things in life are at the other side of this storm, this uncertainty, this discomfort. It would be amazing at the impact and effect that it would have globally.
I couldn't agree more.
So you're playing professional rugby and you go on to have a successful career eventually, as with all things, especially being a professional athlete in such a high impact sport. Your time comes to an end. What was that like, hanging up, being a professional athlete at such a high level and transitioning? And then how did you find your way into real estate?
deciding to actually go to France, which then opened up another small door for me to go to New Zealand. And I withdrew from my Peace Corps assignment, which then got me on the U.S. team radar. And then I find myself at the Chula Vista, California Olympic Training Center. Then that continued to evolve to where I played in the 2011 World Cup and selected for the 2007 World Cup as well. Grateful to earn a captaincy role for a time and then play in the French Top 14 and the English Premiership for Bath. I mean, looking back, most people from my hometown never would have thought anything like that. But to your point, it's really like, well, what could happen? And what if I just put myself out there a little bit? My days in that later stage of my career as a professional, Tim, everything was mapped out. I knew what to wear. I knew where I needed to be every day. And there's going to be a media engagement. And then we have a team lunch. And then we have autograph signings. And then we have a captain's run. And then we need physical therapy. It was just amazing. I was wearing heart monitors and GPS, and everything was tracked. And progress is always tracked, which is important because honestly, in life, that's a direct reflection to business and your personal life too. Like tracking where you're at. You have it as a waypoint with wherever you're trying to sail to. So that was a really great time. You're on TV, people know you, you've got an agent, you've got contracts, all of those things. It's, professional athleticism is super sexy and it's certainly celebrated, right? And then all of a sudden that's going to come to an end. And I was really taken back and did not anticipate how hard that was going to be. And that's opened up my world to making sure staying connected to guys that have retired and reaching out to people and knowing that there is that fraternity that you spoke about where you've got to watch out for people because there's been a number of rugby players, there's been a number of professional athletes in general that have unfortunately committed suicide because things got so dark. What really took place, and I can share because of my own scenario, was there's an identity crisis because I was John the rugby player and I knew what I was going to be doing with my team and we were high performing. It was just a rush. It was a fantastic moment in time. Everything about what you were doing every day was to get better. And then when you stop, well, what am I actually supposed to be doing? Who am I? And those are really powerful things that you have to kind of grapple with. I'll be very upfront, Tim, in saying that I was emotionally bankrupt and didn't have a direction and had a very young girl at the time. She was 6 months old. And I finally got to the point where I knew that I needed to get a coach. And that was a big game changer for me, where I needed to be made accountable. I needed to work through some things. I needed to hear some tough comments and conversation from somebody that was looking out for my best interests. And at that point in time, I did not have the money to do so, but I didn't care because I was so done with how I was being at the time and who I was being. It's amazing how money appears when it has to. I found that money for that coach somehow and really didn't look back. And I have had a number of coaches along my journey since then to continually invest into myself, continually help me, walk along with me in my journey. And it's been pretty amazing. But to your question, Tim, about how I got into real estate, I jumped into the entrepreneurial space for about 5 years directly after. And I had served my greatest contribution to that company and looked around and said, how can I take control of my outcomes a little bit more? And the work that I put in is what I get out, which was very similar to rugby. And real estate's been in my world for a very long time in one form or another with family and friends, a lot of people that I respect. And so I just went ahead and dove into the real estate game and started to be a student.
Before we get into real estate, I just want to emphasize a few points that you made. First of all, thank you for being incredibly vulnerable and open. I know for a fact there are people listening to this podcast that need to hear that message, that need to be reassured about coaching and self-development. You said a couple things where when you had no money, when you were in this dark place, when you felt like you had no more options, you said yes to development, to coaching. And even though you didn't have money for it, it's funny how money always shows up when you need it. Thinking in that way, in that abundance way, like things will be made possible for me if you just tell yourself that and live that life. It's amazing how true that is. And right in alignment with what you're talking about with coaching, we talk very heavily about the importance of coaching, the importance of self-development, how if you have a finite amount of resources, the best investment you can make is by far, hands down, to invest in yourself, your development, your network, your mindset. You and I had a short phone conversation leading up to this podcast, and we talked about the similarities in professional rugby and special operations units. It's a very high-level organization. There's a lot of outside forces that are dictating your day-to-day, telling you where to show up, fly across the world, so on and so forth. A theme that I've noticed with my fellow veterans and also a lot of entrepreneurs is this theme of identity. It's really important to separate an individual identity, your purpose, from who you are and how you're getting paid. How you get paid does not define who you are as an individual. And whether you're making a lot of money or not a lot of money, or whether you're winning games or not winning games, it's fiercely important to separate your identity from those aspects, because that's not who you are as an individual. And when that time in your life disappears, when those tasks are gone, you're very susceptible to spiral, to falling into those deep depressions. And having a clear purpose, who are you here to serve? What is the greater good that you're living for? I think those are very, very important to have identified before you transition through different phases of your life.
Tim, you're right. And the pivoting moment for me is when I realized that rugby is something that I did. It wasn't who I was. And that was a big defining moment for me. I'm going to give a shout out to Kevin Hall, a friend of mine, as an author and a speaker. Kevin talks about being a one of one. We're all irreplaceable, unrepeatable miracles, and we're one of one. I think that that's pretty special to recognize. And you can label yourself. I mean, go to a party. What's the first thing that somebody says to you when you go to a party? Friend,
what do you do?
What do you do?
Yeah.
What do you do? Oh, okay. Oh, you're a lawyer? Okay, got it. I've labeled you as a lawyer, right? Oh, you're in the military. Okay, you're a military guy or girl. Rather than like, what do you like doing? Like, what makes you the happiest? That's actually more about who you are, not what you do. There might be somebody listening that maybe is right in this moment of time where they're having this transition and they're like, I don't know who I am. And, that's okay, because guess what? Although you might feel isolated and alone, you certainly are not alone, and you definitely are not trailblazing a path. And there's a great, great community of people out there, men and women that are just about getting better and helping one another, opening doors for each other. So there is that community, and you've got to be open to recognizing that and then opening up yourself to participating in that and pouring into it as well, seeing what kind of value you can bring to those relationships.
For people that also feel stuck, just start, because you cannot estimate or measure what's going to come of that. And like we talked about earlier, you're going to become a new version of yourself. You're going to learn things about yourself. You're going to morph into the next and better version of yourself. And just starting is just such a helpful discipline to have in life. To continuously move ahead, start something, I think is also very, very important. Okay, so we leave rugby. We're investing in ourselves, coaching. You've exhausted the journey with entrepreneurship, serving this company that you served for 5 years in particular. You have a network of real estate friends and family. It's always been in your life. Fast forward today, we have 120 employees and 4,000 units. So what did it look like when you first started into real estate? When you were thinking like, okay, this is something I think I want to do. What did that progression look like?
It started with me being in residential real estate as an agent, wearing out dress shoes, door knocking, because I was just in search of anybody that wanted to buy a house from me. Then I just stayed consistent and stayed persistent. And again, having more doors open for me that I was willing to walk through with people that just want to help. And there's a lot of folks that helped me along the way. All of a sudden I got a client, and then I got two. And then all of a sudden I'm on the higher end of the MLS and making some great sales. And then by the end of my career, 80 million bucks sold in real estate, which for a 5-year career is not bad. But what happened was I recognized in sales that I was only as good as my next sale. And I'm thinking more globally with my finances. And I started to be really curious. I'm hearing things, I'm reading things about cash flow, about investing, and making money while you're sleeping. Wow, what would that feel like? Just giving myself the space to be curious and time on task to meet the right people and to ask the right questions and invest into myself. I started to invest into apartments as a limited partner, and then eventually worked myself into relationships that made sense so that I could then be a general partner on a deal, and then another deal, and then that grew into a long-term relationship with the guys at REM Capital. And eventually they were like, hey, this is where we're going with the business, and I think it makes sense for you to jump on board as well. I've been a partner there ever since. Big credit to Robert and the team that were there far ahead of me, but we had a brisk 2022, put it that way, of acquisitions. So now we have about 4,000 units in 7 states with $250 million in development deals as well.
Wow. That is a brisk 2022 there. And congratulations for that. We have a wide spectrum of listeners. We have people who are syndicators, who are involved in commercial, who are doing regular transactions, month after month. And then we also have people who are just starting the journey, who maybe even haven't bought their first deal yet. And I think we'd be best serving the audience if we paused momentarily and just kind of gave a 10,000 foot flyover view of what is a syndication. And let's define things like limited partnership, general partnership. How are these deals typically structured and broken down? And what do these terms mean? And why would you invest in a syndication as opposed to going out and doing this by yourself?
Yeah, let's throw down some ground rules too. Threw out some big numbers, but I will say, like, my first real estate check was about $2,100. And this is coming from a guy who was doing EBT and was in the unemployment line. So I'm always conscientious of folks listening to things when there's people that have done quote unquote bigger things or had some success in their life, and they're failing in their current life and their current circumstances to relate. I can guarantee you I've been in many places where you might find yourself right now. With that being said, apartment syndication is wonderful, and real estate is fantastic in general because there are so many different sides of the cube where you can make money, where it works for you, your goals, your personality type, what's important to you, the kind of control that you like having or not having control. What I always appreciated about apartment investing was scale, for one. It just made sense to me. Okay, rather than having 7 multifamilies across a valley, why not have 150 doors in one spot? And then you could have the economies of scale and efficiencies, is what I'm speaking towards, about having on-site management, having a full-time maintenance person. All of those things just made a lot of sense to me. So that's really kind of what got me attracted to the apartment side of things. And that was what's important to me. Now, that being said, don't compare me to what you should, quote unquote, be doing, because if your thing that's going to get you excited is to have 3 single family homes that are paid off, that's a win. You could do land flipping, you could do house hacking, you could renovate, refinance, all that sort of stuff. So there's a ton of different ways to do things. But for me, it was apartment investing, and I really was excited about that. How we structure things and why it's interesting for somebody to invest in. We're general partners. So we operate the deals, we find the deals, we're really actively managing every side of that deal, that asset. And limited partners can then come on board with us as an investor, and that gives the exposure to a cash flowing piece of real estate that's bigger. What I love about it is, let's say it's 300 units, but 25 people aren't paying their rent. Well, guess what? You're still okay. You're still paying the mortgage. You're still cash flowing. But when you have a single family house and you've went from 100% economically occupied to 100% of nothing, which is not comfortable to be in that space. So people like that. They like the stability. They like the longer term approach. And we like to add value on properties, which means that we're doing renovations so that we can charge more rent and give a better experience to the resident, because the resident is your client. Yes, we have limited partner investors, but we really need to focus on the resident too as a client. So we always say we have 2 clients, which is an important thing to recognize.
I don't mean to interrupt because you're on a roll here, but so for people in the audience listening, and you're hearing John talk about limited partners and then general partners who are sourcing the deals and managing and running the deals. When you have a syndication like this on a larger deal, it typically requires capital, and the person who finds the deal may not always have all the capital in hand or want to. It may not be advantageous for them to come up with all the capital themselves. And what they're going to do is leverage. They're going to leverage debt. And how they're going to do that is they're going to find a deal. They're going to do the numbers, make the performa. They're going to identify what is a really solid deal. And they're going to have a track record of doing this. There's a history of them successfully doing these types of projects. And then what they're going to go do is find people, investors, to invest in this deal with them and get the benefit of cash flow distribution, so on and so forth. And this is split into 2 categories. You have your general partner who we were talking about is more active in the deal, managing day in, this is a job for them. And then we have our LPs or limited partners. And those are people, it could be you and me, it could be everyday individuals who contribute an amount. It could be a percent, it could be a dollar amount to this deal in exchange for a return. Each deal is unique, and hopefully you can kind of give our listeners how that's split up. But typically, limited partners own a portion of equity in these deals, and after the debt is stabilized, the deal is stabilized, you're going to receive, distributions, whether that's monthly, quarterly, annually. You essentially take a lump sum of money, you pay it, you put it into this deal in the care of the GP, and then the GP gives you a return on your money. It's similar to if you were going to go invest in the stock market, put your money in a mutual fund or something like that. You wanted to go to Edward Jones and say, hey, I have $100,000, $500,000. These are the types of returns I'm looking for. This is the type of risk I want. And then they manage that money. These are the types of deals that John's talking about in these apartment syndications. Is that correct, John?
Yeah, that's very well said, to be fair. And why it's appealing is because we appreciate that people have very busy lives. They have their active income. I always use my brother-in-law as an example. I mean, he's an internal medicine doctor. He's got two beautiful daughters, my nieces and my sister. So his life's full. The idea of him having a phone call at 9:00 at night on a Friday to take care of a leak or something like that because he owns a single family rental, or having to manage the manager of that particular house or whatever that is, doesn't really appeal to them. Being able to have trust and confidence in somebody that's very competent in real estate and investing and apartment acquisitions and management is worth its weight in gold, and saying, okay, well, here, I'm going to ride along on this deal with you. I think it's fantastic. It could be 20, 30, 40, $50 million or more. You're going to go get debt, and there's of course good debt and bad debt, right? And then there's going to be some cash flow, and every month, or sometimes depending on who's doing the deal, it might be a quarterly thing. We typically do monthly distributions. And then you get an email update on the property, how it's performing every month. And at tax time, you get your tax document. It is a very hands-off thing, and you do not have control. I think that that's an important thing to recognize. But somebody that has a track record and that's their full-time gig, they have to do well. For one, the limited partner is getting Class A shares. The general partner is getting Class B shares. They're going to get a piece of the upside when it sells. They're going to get a piece of the cash flow over a certain amount when there's a preferred return provided. And they've got to do well. They have to make sure that that asset performs. We work with over 600 limited partner investors, and a lot of those folks are repeat and referral. I mean, that's the lifeblood of the business, and that's the name of the game.
So I think like a hesitation that some people may be sitting here listening to is they're giving you a lump sum of cash that they have no control over. But I would argue that there's a lot of pros in having an expert handle your money in a big real estate deal like this. And we can go into a number of different reasons of why this is advantageous to you.
Real quick, somebody will immediately have reservations about investing into an apartment deal when it's a tangible asset that has a profit and loss. And, the replacement cost, especially now with inflation, is certainly something to consider. And, it's got cash flow. They'll balk at that, but they will gladly go buy a cryptocurrency where they don't have any control over what happens there. Or they'll gladly go and buy Tesla stock. And last time I checked, most people don't have a direct line to Elon Musk about what he's doing and the decisions he's making, right? People have a lot of reservations, and I think that it's just important to check exactly what's important to you and why you're feeling that way. Some people say, I would never invest in real estate if it's not in my market. I need to own it, and I need to be able to drive by it. Well, have you invested in Google? Do you need to drive by Google headquarters? I mean, that just doesn't make rational sense.
And I agree. And I think another pro that needs to be discussed is, let's say you're a high income earner. You don't have a lot of time. Do you have time to go make 30 offers and walk away with 2 or 3 properties that after taxes, insurance, maintenance, vacancy, capital expenditures, property management, each of those properties is spitting out maybe $200 or $300 a month in cash flow. And honestly, right now in this market with the interest rates we're in, good luck. Good luck with $200 or $300 a month. Let's say that one of these units is a single or maybe even a duplex and you have a vacancy in there, all of a sudden your bottom line is getting kicked in the pants. Like you were talking about earlier, this economy of scale, when you're bringing investors into deals that have hundreds of units, then you can weather some vacancy, you can weather some rent softening and still pay a distribution, still be profitable because you have a larger unit count that can tip the scales in the opposite direction and make everything neutral faster.
Yeah, Tim, on that, the numbers are bigger. So let's do this. Let's pick a 208 unit property. Let's just say over the medium term, because we identified the opportunity, meaning that we saw that the sellers weren't exactly capitalizing, kind of a mom and pop thing, which by the way, there are thousands of mom and pop owners right now. And if you understand demographics within the United States, you're going to see that there's always a turnover. There's always going to be a seller. People want out. They want cash now, whatever their season of life. But we identified that those folks that were managing it, they didn't have it up to market rent. And we also saw that they really hadn't done some updates. So we know that over the medium term, let's call it 5 years, that in those 208 units, we're going to, on average, raise the rent by $300 a month. Because it's coming up to market, and plus we're also going to add value into it so that people are like, oh, this is great. So if we do that, then that's $62,400 times 12 months. We have $748,000 in additional revenue. Let's just be conservative and say that's a 6 capitalization rate, just a way to assess value on a property, which cap rates are fluctuating right now because the debt market is all over the place. But I've seen 4 cap. So a 6 cap is fairly conservative depending on what the product is and where it's located in what market. So if you take that by a 6 cap, because that's how multifamily properties are actually valued, Tim, that's $12 million in additional value that you've created on that property. $12 million in additional value. Those are massive numbers.
And back to the point of, well, my reservation is I don't want to hand somebody my money and I have no control. Well, I would push back on that and say, are you an expert in this asset class? Do you have the relationships with contractors, with supply companies, with deal flow? Can you find this type of margin? I think it's arrogant to think that you are the best, most qualified human in the world to give yourself the highest return on investment of your capital. It makes way more logical sense to give my money to somebody who is much more versed, much more educated, much more of an expert in that niche or industry or pocket. Sometimes other people, and having less control, it gives you a higher return.
Right. You know, some people, they observe different operators for a year or two. They get on their mailing list, they jump on a couple of calls, they get comfortable with it. Everybody's on their own timeline. And it's not black and white either. Some people have a portfolio of single family. They're invested into some other projects that they're doing, and they also have some exposure to multifamily too, which I think is fantastic. Some people are limited partners to a degree on some deals, and they also do some general partner stuff too. I'm not saying that my way is the only way, and I think that there's a lot of different ways. And by the way, if you're investing, congratulations. Like, you're actually investing, threading it back to planting seeds, right, Tim?
Absolutely. Explain the parameters of your company. Do you manage contractors? Is there a portion of your company that specifically subcontracts? Are you general contractors for your improvements? Are you doing the property management in-house? What does it look like at REM?
Yeah, so we have the REM corporate side of things. So we have our partnership level, we have VP of accounting, we have marketing, all of those sorts of things, acquisitions, investor relations. And then on the REM living side of things, that's our property management wing. Like I mentioned, 120 plus employees now over those 7 states where the assets are. And we've broken that up into Texas, the Midwest, and the Southeast, because we feel that we can manage those better. To your point about the value add thing, I think in a COVID world, that's really the issue, is finding the right people. Not only how do you attract the right people within the organization, but your subcontractors that are going to go in there and do the value add work on that kind of a portfolio. That's also a big challenge too. So yes, we do look to incorporate general contractors and subs on specific things that are needed on a property. Maybe we've got a big drywall project, or maybe there's some plumbing things or cabinetry, et cetera. But we do also do some of those renovations in-house, depending on the personnel that we have in that area.
In these syndications, in any deal, really, rule number 1 is don't lose money. Always try not to lose money. I think successful syndicators, most of the ones I talk to, they always talk about this theme of under-promising and over-delivering. You don't want to over-promise. As we look ahead, we're in a little bit of a volatile market, especially with debt. A lot of people that got into short-term debt in the last couple of years. We have some bridge financing coming due. We have some rate adjustments. And there's a lot of talk about an influx of multifamily coming on the market next year. I think there's 900,000 multifamily permitting starts. There's talk of job loss recession, and all of that impacts rent softening. And as you're underwriting these deals and looking for value add opportunity, a large portion of equity squeeze out of these deals that you're bringing for investors is raising rents over time. How are you modeling for the future? How are you taking these types of things into account as you're building these performas?
Great points. The first thing that I would recommend for people that maybe are familiar with syndication, maybe it's new to them, is everybody's going to say they're conservative when they're talking about their deal. What does that mean? That is the first question that you have to ask. Show me where you're being conservative. What does that mean? What we do, one, we're looking at 5 to 10-year time horizons. Why do we do that? Well, we do that because we believe in real estate over the long term. Not really sure what's going to happen in the next 12 months. We definitely don't want to make promises in the next 24 months, 36 months, because frankly, we don't know. We don't know what's going to happen. But when you look at real estate and study it over history, it does well over long periods of time. So when we have a big win on a property over 8 years where we've executed on that business plan day in and day out for years at a time, it's probably going to do quite well. And what I demonstrated there, raising rents $300 a month on average over a 208 unit property, that's $12 million. Well, do you believe that we could theoretically raise rents $300 at a property in the next 8 years? That's probably very doable. Even today, when things are softening, you mentioned, well, what's softening mean? Well, Walker Dunlop says that it's going to be 3 to 4% rent increase over the US. Also realizing that real estate's hyper fragmented, it's hyper localized, and what's happening in Detroit is not happening in Tampa. And you pick your metros. So where are people going? Where are they investing in jobs? And all of those things are all questions. We could probably do another hour.
Oh yeah, I'm sitting here thinking like, man, this might have to be a second episode. I'm just getting warmed up on some of these specific questions here. But I do want to wrap up with a couple questions of advantages of participating in these types of syndications. What's trading on the market right now? If I was interested in being a limited partner, what are we seeing for like GP, LP split? What type of preference or cash on cash return are we seeing today?
Yeah, that's a great question. And I have seen very, very limited deal flow. For one, at REM Capital, we are openly stating that we're not in acquisitions mode for the next at least quarter or more. And the reason why is because we've had such a quick shift in the debt market that sellers that were being told by brokers, hey, your property's worth $70 million 12 months ago. Well, that's not the case anymore. But sellers still like the idea of their property being $70 million. And it's probably, by and large, it might be performing pretty well for them too. So the notion of going back up on market now at 58, that hurts. Like, does anybody want a $12 million loss on their apartment that they've been holding? I don't think I would. And so we're waiting for price adjustment and trying to get some clarity on what the new market is going to be.
You want to invest with people who have the wisdom to know when to take their time and when to hurry up. Life is all about understanding tempos, when to fight, when to push really hard, and when to kind of go with the flow. And you don't want to be giving your money to people who are making reckless decisions and promising you that they know when they don't know. If I was to give my money over to an organization, I would want to give my money to an organization that was honest with me and say, you know what? It's a little bit volatile. We're not really sure what the future holds. So what we're going to do now is we're going to work on stabilization and debt hammer. We're going to stabilize these assets. We're going to hammer down the debt, and we're going to get ready for the next acquisition mode. You want to partner with people that have the maturity and wisdom and the honesty to tell you those types of things. Last question before we get out of here. As a passive investor, as a limited partner, real estate has huge huge tax benefits, especially on the side of depreciation and offsetting active income. Can a passive investor collect or harvest depreciation? And I know there's some rules and legality about, well, did the capital come from a 401k account or an investment account? And I know that we can get into the minutia, but are limited partners allowed to participate in depreciation on this income that they're receiving?
Sure. So there are some nuances, and I will always preface whatever I say is work with your CPA, your tax advisor. That's an important thing because everybody's situation is a little bit different. But at a minimum, as a limited partner, let's say that you're getting $6,000 annually from your cash flow. You've got a little bit of a drip on your investment. You're going to be able to use the depreciation of the asset towards your cash flow to offset those taxes. So in essence, you would have a tax-free bit of cash flow. Now, the other portion of that that's really exciting is the 1031 exchange. So that is your way to defer capital gains upon a sale, which is something that we always look to do and have done in the past, where we're getting to a point where that asset is mature enough and the market is cooperating. It seems like a great time to sell. We execute that sale, identify another property. Everybody jumps in with us from that previous deal into the next deal. They've paid no capital gains tax. They've rolled everything into it. Maybe potentially they've had a 2x equity multiple. So they're, for simple numbers, their $100,000 grew to 180, 200,000, and they've just rolled that in. They haven't paid taxes, and now they start cash flowing again, which is amazing. Now tell me where you can do that sort of stuff in other asset classes. There's a little bit out there, but not much.
And this is exactly why we're bringing up these topics. And I think we're going to continue to talk more and more about these types of deals and this type of structure. And John, maybe I can twist your arm at some future date and we can get back in here and ask more specific questions about these types of topics. Because I think as we look ahead at the next couple of years, as people are starting their investing journey, it's going to be pretty tight and competitive on the single family, small multi side. And any competitive advantage that we can have or participate in, now's the time. Now's the time to sharpen our axe, to level up our education, level up who we are, invest in ourselves and our training and our education. And so we're just going to keep bringing this type of information to you, the listener. And if this information is helpful to you, if you're learning something, if you appreciate what you're hearing here, the guests that we have, please do me a favor, like and share, give us a rating, tell your friends about the show, and send us more guests because we do this for you. This show is free for you to learn and become a better version of yourself. Before we get out of here, I just want to thank you, John, so much for your time and your wisdom and education. How can people get in touch with you?
If you're on LinkedIn, easily find me, John Vander Giessen, and also you can go to our website, remcapital.com, or you can email me at john@remcapital.com.
To all you out there in the Dynamis world, I want to thank you for stopping by this week. We cannot wait to see you next week. And as a reminder, you can find all the details below in the show notes. And if you want to meet up with us in person and you're local in the Tacoma area, don't forget to subscribe and sign up for our local Pints and Properties meetups. You can find information, get on our mailer list. We cannot wait to see you there. Catch you guys next week.